Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we will be discussing how to withdraw your money from banks and invest it in an opportunity that has the potential to grow 100 times in value. Imagine a world where the cryptocurrency market is about to experience an extraordinary surge in the coming months. Forget about the setbacks of the past, particularly the prolonged decline in 2019 caused by reductions in global central bank balance sheets. This time, things are different. Given the current global situation and its trajectory, we are on the verge of witnessing an unprecedented acceleration in cryptocurrency growth. It's reminiscent of the acceleration 2015 to 2016 cycle, where we saw a phenomenal surge followed by a sideways correction that lasted several months. And just when you thought the excitement had settled, get ready for another monumental upward movement, fueled by the dynamic actions of central banks. Prepare yourself to seize this incredible opportunity. This video will guide you through the process of withdrawing your hard-earned money from banks and steering it towards this captivating investment venture. So fasten your seatbelts because this ride is going to be an exhilarating one. The crypto industry attracts significant venture capital, driving innovation in sectors like gaming, NFTs, and DeFi. Raoul Pal believes crypto will outperform traditional assets due to currency devaluation. Bitcoin offers an escape from debt burdens. Trust in traditional banking wanes, boosting crypto awareness. The US dollar's prominence declines, leading to a need for a gradual transition. If countries move away from the dollar, it can cause a mismatch between debts and income in different currencies. Debt entails giving up control in exchange for immediate cash. Cryptocurrencies like Bitcoin offer a sense of control and act as a solution to challenges in the traditional financial system. The convergence of traditional and digital value system is underway, triggered by events like Russian sanctions, currency devaluation, geopolitical shifts, and digital technology adaptation. This increases the likelihood of embracing digital value systems. However, limitations remain, such as the need to earn a living and engage in political and taxation systems. Nonetheless, the system offers a potential pathway to a different approach. In 2008, trust in banks, governments, and media eroded, leading to the emergence of cryptocurrencies as an alternative based on a trustless system. While gold has traditionally served as a store of value during times of low trust in currencies, cryptocurrencies address its limitations. Despite high volatility, they offer unique advantages as a hedge against currency debasement for long-term savings. Cryptocurrencies have the potential to reshape the financial landscape and provide a safeguard against currency debasement in a world where trust is scarce. Although daily transactions with Bitcoin may be impractical due to the price fluctuations, sovereign wealth funds are diversifying their assets and securing their independence by acquiring gold. This strategy is driven by concerns about potential risk associated with holding U.S. treasuries, especially if Russian reserves held in them were compromised. These funds recognize the need to safeguard their wealth and are exploring alternative avenues, including the dynamic world of cryptocurrencies. Middle Eastern countries are recognizing the potential of the crypto market to achieve their goals and assert independence. Cryptocurrencies offer individuals a sense of trust and personal agency operating outside government control. Ethereum stands out for its secure platform, yield generation, and liquidity. Its capabilities and Web3 technology contribute to the momentum driving crypto adoption. Trust, independence, and cutting-edge technology converge to fuel the rise of cryptocurrencies, embraced by sovereign wealth funds, Middle East countries, and individuals seeking financial freedom. Here are the steps to withdraw your money from banks and invest it in an opportunity with the potential to grow 100 times in value. Number 1. Evaluate the opportunity. Research and assess the investment opportunity thoroughly to understand its potential for growth. Number 2. Create an investment plan. Develop a well-defined investment plan that aligns with your financial goals and risk tolerance. Number 3. Withdraw funds from banks. Contact your bank to initiate the process of withdrawing your funds. Follow the necessary procedures and complete any required paperwork. Number 4. Choose a suitable investment platform. Identify a reputable investment platform or brokerage that offers the opportunity you wish to invest in. Ensure it provides a secure and regulated environment for your investments. Number 5. Transfer funds. Transfer the withdrawn funds from your bank account to the chosen investment platform or brokerage account. Number 6. Execute the investment. Follow the instructions provided by the investment platform to invest your funds in the chosen opportunity. Take into account factors like timing, diversification, and any associated fees. Number 7. Monitor and manage your investment. Stay informed about market trends and regularly review the performance of your investment. Consider adjusting your strategy as needed. Number 8. Seek professional advice if necessary. If you are uncertain about the investment process or require guidance, consult with a qualified financial advisor who can provide personalized recommendations. Remember, investing involves risks, and it's important to make informed decisions based on thorough research and your individual financial circumstances. Have you explored DeFi platforms and the concept of yield? Ethereum's role in shaping a thriving digital economy is fascinating. Share your thoughts in the comments as we embark on this extraordinary journey. That's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.